end of 2018, we are recapping the year gone by through the sectors that have impacted the market and the economy. Well, Nifty IT has been one of the best performing indices this year with an outperformance of over 20%. Here is Reema Tendulkar with a look back at the IT sector. Reema, over to you.
Yes, a 20% outperformance by the sector, one of the best performing sectors this year. And the key reason for that, the sector was boosted by the Trump tax reform, which drove US growth and spend. INR-related depreciation, the rupee weakened by 10% from the opening levels to the lows, and also regular capital return to the investors. But where 2018 differed from expectations at the start of the year? At the start of the year, the hope was that all the companies will show a meaningful improvement in growth rates. However, contrary to expectations, there was not a broad-based pickup in growth. Growth was actually only led by TCS, and companies like Cognizant actually witnessed a slowdown in growth rate, which is what explains the stock returns this year. As you can see, it was TCS which was the best performing stock this year with a rally of more than about 40%, given that this company is likely to see the maximum expected improvement in growth rates. For Infi, it was about a 26% return, while for Wipro, it was a fairly pedestrian year. So this is how the revenues of the companies could stack up by the end of the year. For TCS, the maximum improvement from a growth rate of 6.7% in FY18, the company is likely to see a double-digit growth, while for Infi, the improvement could only be to the tune of 1%, and for HCL Technology, the organic growth could actually slow down on a year-on-year basis. For HCL Technology, there was another problem. The strategic tilt towards products and platforms has not gone down very well with the analysts. The two trends which are mixed so far and on which we need clarity, one, of course, is deal wins, and the other one is BFSI. So deal wins at record levels for Infi as well as Tech Mahindra. But on the other hand, Accenture, when they came out with the numbers, said that the new bookings growth was the slowest that we've seen in the last 7 quarters. On to BFSI then. Very strong for TCS, Infi as Wipro in the quarter gone by. But for Accenture and Cognizant, it was on the weaker side. Some positives which have played out, we've seen an across-the-board improvement in hiring as demand has picked up and utilization levels are hovering near 3-year peaks. In fact, the Naukri IT Jobs Peak Index has seen about an 8% growth in November, and the average in the last couple of months has been close to about 17%. Digital also now is a meaningful contributor to the company's overall revenues, roughly about 30% of the overall piece. Now, some key questions for FY19. Will demand accelerate or even remain steady? While deal momentum has remained strong, the macros are a lot more volatile, whether it's trade concerns or Brexit. Accenture has actually warned of client budget growth moderating in 2019. Also, the question is whether companies can fulfill the demand without impacting their margins too much in the light of talent shortage in the US and constrained H-1B availability. And the rupee has already appreciated. Now, as JP Morgan puts it, 2019 revenue trends imply improved growth rates, which could prove optimistic if the macro risks materialize. But if major risks such as Brexit, trade war prove to be benign, IT services could outperform as companies have gone through the pain of investing to win against the secular themes. Back to you.
Thank you, Reema, for that. In fact, let's continue taking a look back at 2018, when Prime Minister Narendra Modi announced India's intention to buy 36 Rafale fighter planes from France off the shelf. His government projected the move as a swift policy action taken in national interest. Now, more than 2 years later, the government-to-government arms deal has turned out to be the biggest political hot potato of 2018. Let's look at how the Modi government's decision to buy Rafale fighters has turned out to be one of the most controversial defense deals in recent times.
On 20th July, as the debate on a no-confidence motion was being discussed in the Lok Sabha, Congress President Rahul Gandhi stunned the nation by hugging his political nemesis Prime Minister Narendra Modi on the floor of the House. But no love was lost between the two as Gandhi attacked the Modi government on several issues, including the €7.8 billion Rafale fighter deal, during his intervention on the debate.
The Prime Minister must also explain why this contract was taken away from HAL and the youngsters of Karnataka and given to a businessman who had a debt of 35,000 crores.
Prime Minister Modi rubbished the allegations, terming them irresponsible.
मैं कल्पना नहीं कर सकता हूं कि सत्य को इस प्रकार से कुचला जा सकता है, सत्य को इस प्रकार से रौंदा जाता है।
The opposition had been firing salvos at the Rafale deal since 2017. But it turned on the heat after this year's monsoon session. The Congress party decided to make it a national issue and alleged that there was corruption in the deal, and the Modi government facilitated a 30,000 crore rupee offset package that was to be executed by Anil Ambani promoted company Reliance Defence. Anil Ambani maintained that his business rivals were promoting misinformation on the deal.
I have personally written to Shri Rahul Gandhi stating that Congress has been misinformed, misdirected and misled on the Rafale deal by malicious vested interests and corporate rivals.
At the center of this controversy was Paris-based Dassault Aviation, which told cnbc TV 18 that there was no corruption in the deal, all due process got followed, and the joint venture with Anil Ambani promoted Reliance Defence was a conscious business decision.
The choice of Reliance is mine.
But on the 14th of December, there was a twist in the tale. The Supreme Court rejected a petition that sought a CBI probe in the deal. The Apex Court said, "We are satisfied that there is no occasion to really doubt the process, and even if minor deviations have occurred, that would not result in either setting aside the contract or requiring a detailed scrutiny by the court." The opposition parties led by the Congress disagreed with the Apex Court and sought a joint parliamentary panel probe.
जिस दिन राफेल मामले पे इंक्वायरी हो गई और वो इंक्वायरी पार्लियामेंट करेगी, जेपीसी करेगी, जिस दिन वो हो गया, दो नाम निकलेंगे, नरेंद्र मोदी, अनिल अंबानी, नरेंद्र मोदी. Thank you.
The Modi government, which had been on the back foot after losing 3 states to the Congress, saw the Supreme Court verdict as a chance to corner the opposition parties on the issue.
और इसलिए हम चाहेंगे कि कम से कम इतना तो हो कि सदन के दोनों सदनों में जो कल तक कांग्रेस पार्टी मांग कर रही थी कि क्वेश्चन आवर सस्पेंड होकर राफेल की डील पर चर्चा हो जाए.
While the government has claimed victory on the issue, opposition parties are nowhere close to abandoning the attack on the Rafale deal. That's because the Supreme Court order alludes to a CAG audit of the Rafale deal, which is yet to be completed. Opposition parties maintain that this makes the clean chit of the Apex Court null and void. With lawyers like Prashant Bhushan getting ready to file a review petition against the Supreme Court order, it is clear that the biggest political controversy of 2018 will continue on simmering for some more time.
Oh, well, yes, one of the biggest political conspiracies in 2018. Let's see how it shapes up in 2019. Well, it was quite a bit of roller coaster day for the equities today, so let's get into market opinion. Now, earlier today, we spoke with S. Narain, the ED and CIO of ICICI Prudential AMC, and began by asking him his outlook on global markets. Now, his sense is that the valuation of global equities has corrected in recent times, and this can be seen as a healthy trend. Take a look.
See, we come from the mutual fund fraternity, and if you look at the start of the year, small and mid caps were extremely overvalued, and globally markets were on a roll. So actually, as the year ended, we have a situation where market valuations have corrected. I mean, even in a big, large developed market like US, you've seen a massive correction in the last 2 months, and that has made markets much more reasonably valued in most places. And from an investor's point of view, this kind of an environment is clearly superior to what we saw at the start of the year, because today for us, barring about a handful of stocks in large cap, mid cap and small cap, most of the market is more reasonably valued, and therefore there are interesting opportunities for us to look at investing. So I would actually view the correction as healthy, because if you have an overvalued market and you're a long only mutual fund, you had more problems at the start of the year than you have at this point of the time.
Give us a little bit of perspective. The global commentary that we read is extremely gloomy. I mean, in this context, can we brave it? Can we be the lone man standing?
So frankly, we are not worried about near-term trends. We think that near-term the markets will be volatile. We think the whole of 2019 could be volatile, due to both local and global reasons, but there are huge opportunities in that volatility. I don't think there are huge opportunities in periods like January 2018.
Do you mean that at such a time you should be buying NBFCs?
Actually, you asked the right thing. Sometimes you can choose to buy another sector which has actually benefited. So if you look at, for example, when PSU banks went through a big NPL problem, you could have bought both NBFCs and private banks, and they actually delivered very good experience. In the recent NBFC issue, clearly the opportunity, the profits, the margins of the corporate banks improved significantly. So I think with an opportunity like corporate banks, actually like NBFC, actually you would buy corporate banks rather than buy NBFCs.
Naren, where do you find support? Do you think that earlier support of 10,300 will work? Because we also have positives from this situation because of crude.
See, actually, if you look at Indian markets in 2018, just like you had a FANG set of stocks in US, in India also you have a set of stocks which have done extremely well in 2018, which are very costly relative to the market. So, it's difficult to predict what happens to the large cap index, because the large cap index has high weightages in some of these stocks. But I think when I look at from a stock picking hat at this point of time, I find different interesting opportunities of stocks with good dividend yields trading at very, very reasonable valuations. And the advantage is that you can look at only the cheap stocks and the stocks with which have become extremely cheap, rather than focus on the index. If you look at the Indian large cap index, it is not yet dirt cheap. But there are opportunities within the index which have become very, very cheap.
How do you all view the IT space going ahead? Because some of these stocks are the biggest losers today as well.
So I would say that one is positive, because I think if you look at it, India has certain areas of strength, and IT services is certainly one of them. And so I think the long-term view looks good, but you have to buy more selectively and more carefully.
Okay, so the long-term outlook remains positive, though you have to specifically pick stocks and follow a bottom-up strategy. But moving on, shifting focus to the auto sector then, we spoke to Rajiv Bajaj, the MD of Bajaj Auto, who says that even though Q4 will be muted for the industry, double-digit growth should continue into FY20. In an exclusive and candid conversation with CNBC TV18, he also said that the company is planning to enter the electric vehicle category by 2020. Take a look at that very interesting conversation.
We will come in with electric vehicles for personal use at the top of the pyramid, because all new technology does well when it comes in at the top, because those consumers appreciate it and can afford it, and you don't have to bleed to introduce it. Now, whether it will be a scooter or a motorcycle, as I've said before, time will tell, but definitely before 2020, both in the personal space in the form of a scooter or a motorcycle, and in the commercial space in our three-wheeler and quadricycle, we intend to be there with electric vehicles. Q4 growth will be very muted for the industry in terms of primary sales from companies to dealerships, although retail will continue at, let's say, the 10% year-on-year growth that we've been witnessing. I have no specific reason to believe that FY20 should be significantly better or worse. So, it's hard to predict the future, but I would assume this level of double-digit growth to continue. I think the biggest challenge for the industry is going to be to make this transition over these two norms related to safety and emission over, let's say, the next 12 months. So that's a big challenge for all of us.
Okay, time to shift focus to commodities now, and the big headline today was the slip in crude prices. Now, crude is now trading around $51 per barrel mark versus the $86 level that we had seen in the month of October. Preetham Kumar Patnaik, business head at Reliance Commodities, joins us on the phone line to discuss the trends in the world of commodity. Mr. Patnaik, good afternoon. Thank you so much for joining us. Now, crude is 45% off the recent highs, given the concerns around global growth slowdown. Do you think the concerns are a bit overdone, and how do you actually trade given the volatility in this asset class?
And down from its October highs, and it's the first time in the last 17 months we've seen crude oil coming below $50. this is the this is the kind of scenario which is happening in the crude oil. Because primarily the reason is very clear, that the oil correction has been because of the global market rout, which has been accentuated by the partial shutdown of the U.S. administration, which seems adamant about the wall per se, thereby extending the stalemate well into Jan first week of 2019. And further, to add to that, the scathing remarks of the U.S. president on the Fed's action and the chairman himself has added to the turbulence. But what needs to be kept in mind is very clear, that apart from these, seasonal activity which is happening, what needs to be reminded that the shale production has hit an all-time high. Just to give you an idea, U.S. has added about 100 new, production centers in U.S., taking it up to close to about oil rigs of about 882 rigs in total, which is a massive production number, and which kind of dents out the entire 1.2 million barrel daily production number which OPEC and its allied nations have proposed to come out with. So given this fact, we don't see the bearishness coming off anytime soon. It is going to continue. So, and if you were to ask us our house view, we would always continue to maintain that we will go short on every rally.
Okay.
And just to add to that, if you look at the CFTC data, also the net longs in crude oil have been coming down significantly also. That kind of adds to that, confirms that trend, per se.
Okay, so bearishness to continue for crude, and you talked about all these political comments and turmoils and the economic growth slowdown concerns. Now, given all of that, we have seen quite a bit of sell-off in a lot of these asset classes, riskier asset classes. Do you think this is a time to perhaps go to the safe haven assets like gold?
I mean, that's exactly what the market has done. If you were to notice, gold has really benefited from all this turmoil. We've seen some kind of recovery in the prices, and it's not. We shouldn't be too surprised if we see gold touching $1,300 internationally. As far as India goes, we'll have to wait and watch how the currency kind of behaves domestically to see the exact impact on the gold prices. But, at current levels, we would still ask our clients to go long on gold, keeping a stop loss around 31,300, with the target of 31,850, 900 in mind.
Okay, Preetham, you also touched upon currency. In that space, we had seen a bit of appreciation on rupee today, but it was again a lot volatile. What's your sense on rupee going forward for 2019? Do you expect it to continue to remain volatile?
Yes, we are going to be. So I wouldn't draw it too long, but if I were to even look at it at the short-term level, it's been following two basic directions. One is where the crude is taking the market, and how the equity markets are behaving. So broadly, we think it's going to move in a range. So let's say around 69.50 on the lower side. On the higher side for rupee, and 70.30. This is the kind of the range that it's going to move in primarily.
Okay, Preetham, thank you so much for joining us with that. So bearishness to continue for crude, long or as far as the gold is concerned, and expect more volatility for rupee in 2019. With that, it's a wrap on this edition of Closing Bell. After the bell comes up next.